Good evening, everyone. I'm Sensei Kevlar. I'm here to do some predictive charting. In order to do that, we're going to start in the past, and we're going to refresh. This right here is pretty clearly a head and shoulders pattern right here. Let's see if we can see anything from that to there, on down. The right shoulder didn't even come up all the way. Could we, if we were right here in the market, predict that we were going to have another pull down onto this line right here, even with the rest of it? If we were right here, could this have been a valid opportunity for us to predict that we needed to short? It's like magic every time. Could have been really profitable because we could have sold one and bought it back here, and we could have done it again when we came up here and we used another predictive indicator, the resistance line. Turns out it was our support line that told us what we were going to do right here. This was our support line, and then that's when it turned into resistance again. We can see it again here, and we can definitely see it with the wick coming up here. So maybe on a 60-minute chart, this would be a little bit easier to see. Let's see if we can't get a correlated time frame. Yeah, sure enough, on a 60-minute chart, this particular line presents itself much better, and we can definitely see some action right here that we weren't able to see before. We also see some action right here that we weren't able to see before. So I'd say that's a pretty solid indicator, a pretty solid prediction right there. If you were to take this head and shoulders and project it across here, that would be absolutely my guess. Here we would have probably used a Fibonacci retracement. Sorry, excuse me, a Fibonacci extension, because this is clearly a case where we had a big motion up and we want to see what that motion up again would have looked like. Here's the extension from here to here and then down to the bottom. And what we're going to do is we're just going to drag that out into the future. All I did was I measured from the bottom here to the top here, back down to here, and then I extended it into the future. I did not come up here and draw this line at any time. The Fibonacci extension happened at this line. So if I were to guess where my resistance levels and my support levels would this be one that I would guess? Absolutely. Would this be one that I would guess? Absolutely. Would this be one coming back down, coming off of this thing? You bet. Could we find them again up here? Yeah. At this point, I hadn't even drawn any historicals. I absolutely found them within my retracement. Can we do another one on top of this in order to see where we might predict this to go further? Yeah. Let's go from this motion right here, bottom of here, top to here, bring it on down. Could even bring it on down further. Extend it on out. Where would we predict we might go? Somewhere within this channel right here. Would we want to buy here, buy here, buy here? Would this be a strong buy signal? Absolutely. Would we predict that it might want to go back up from here? Certainly, that could be a valid prediction. Was it? No, you'd need to be prepared to get in again. You really would, because it still had room to go down before you could be profitable. This is how you build strength in predictive indicators, is you recognize that every time you have one, two, every time you have a Fibonacci extension, that doesn't mean that you have another Fibonacci extension every time. Sometimes you do. Like in Bitcoin today. Oh my goodness. Came up and touched 49 something and is all the way headed for coming back down. Here we've seen extension after extension after extension. In this market, they are much more valid indicators. We can see the extension coming off of this line right here. and it correctly predicted the resistance point once again at the 1.618. Once again, here this got touched over and over and over again. It's almost like other people are coming in here and they're drawing the same exact from this to here, draw it across, and then they're programming their bots based upon these numbers. One might suspect. Next up, pay. Yeah, I love pay. What's going on with pay? I know somebody was profitable with pay. Boy, is pay setting us up or what? Pay setting us up with really strong signals, okay? Initially, we had the kind of explosive growth. Could we have seen a retracement here? Let's find out. Come up to here, down to here, bring it on down, extend it on out. We'll just bring it right up to the candle right there, okay? Sure, right at the 1.618, absolutely found our extension right there, got right on it. Could we have done it again? Yes, and we know that probably isn't going to work, because if you paid any attention at this point, 1, 2, extend to 3, a second extension is absolutely possible. A third extension, especially on this type of motion, seems very unlikely. However, what do we have coming up in the future? This is definitely a head and shoulders right here. Left shoulder, head, right shoulder, really shrugging to the right. We absolutely could have predicted a downturn. Head and shoulders are always bear reversal patterns where the market is in a bull situation and it's going to go into a bear situation. So there are very strong bear reversals in these markets where you see it coming above this line, coming back down below, coming to this line and meeting it, going above, going down below, and coming back to this line and meeting it. You can even see this head and shoulders laid out right here. There it is again right there. If we were here in the market and we had identified the head and shoulders, this could have been a very strong sell signal for us, that we could have come down here, bought back in, come back up, done it all over, done this all day long. Now what we're seeing is we want to see another extension of this motion, and if that is in fact in the cards for us, here's what it might look like. Up to here, down to there, extend it on out. Okay, so from here, where could we go? First of all, we definitely see a break of the trend line. This trend is now over. We're coming up on our resistance line right here, looking for a big bounce off of that support, looking for more. So we got pretty spiky in the interest here. We're definitely looking for more spikiness on the volume coming in down here. You'd want to bring in some more Williams indicators, but could something like this absolutely happen? Yes, we definitely could. But I think at this point, instead of using an extension, we want to use a retracement. Here's the Fibonacci retracement. Comes from here, goes to here, extend it on out. We'll just bring it on down to where we're at right now. We'll bring it all the way down to the line right here. Where could we see our trend lines, even if we didn't know that this level was here and this level was here? Could we see them here? Yes. Here? Yes. Here? Yes. Could we see them again in the future? Absolutely. Could we take profits here? Yeah. Here? Yes. Every trend line here is valid. Are there head and shoulders in both macro and micro? All over the place. Every single one of these tools presents an opportunity for us to identify a pattern in the market and tell us more about the market. The cipher pattern, the XABCD pattern, the ABCD pattern, everyone has its use. The three drives. I've shown you the triangle pattern, which is the descending wedge and the ascending wedge. And of course, when we do the planning, and I want to take a step back for a moment and talk about planning for a second, because people are really getting the planning thing, and there's great tools for doing planning right here in TraderView. Let's say that we wanted to go long from here. Okay, well, there's just clicked it. I just took my long position, This right here is my long position, and I just put it where I opened my order, and now it told me, where I'm profitable and how much I'm profitable, and where I'm not profitable and how much I'm not profitable. So this is a really nice tool because it tells me that I'm targeting 16% or I'm targeting 10%. And now I know exactly where I can be profitable on a 10% motion. Well, what if I know my position size? What if I know, that my position size is going to allow me to do not just 10% profit, but 25% profit, okay? Before, we were making 2 or 3% profit. Could we allow ourselves to have 25% profit in a market like this? Yes. Would this change our profitability long term? Absolutely. The difference would be about 24% of the 2% versus 26%. Be about 24% profitability difference, okay? Could we plan for more profit? Sure. How could we plan for more profit? Let's say that we had gotten down here and we had gotten all the way up to 8 positions. Well, could we come up here and sell 4 of them? Yeah, absolutely. And then come up here and sell 4 more at 44% profit and realize even more profit on that position? We certainly could. But what would happen if we needed to come back down here and do this again? What if we needed to make this retracement back to here? Well, it's easy. We're already at 4 positions because we sold 4 positions at profit. Well, if we come back here, we just buy those 4 positions back. We're back at 8 positions. We're ready to go again. We're back where we started. Nothing has really changed except for the fact that we've made money on this leg right here, okay? This is the way of the trader. The trader does not become greedy and take all of his profit immediately. Maybe he lets out 2 positions of his 8. Maybe he lets out 4 positions, 5 positions, and leaves the remaining 3. Whatever he does, he makes that plan before he enters the trade. And he knows exactly how much profit he's going to make. And he knows that he can go ahead and put those orders in. He doesn't have to wait for the market to come up here and for him to enter the orders at that time. If this is my sell target, put in your sell order. Don't wait for the market don't wait for the market. Make the market come to you, right? Bitcoin. Give me some more charts here, people. That was Bitcoin. What happened to BCH? Yeah, BCH, BTC. What's this guy doing? Did we know we were going to bounce off of here? Was this a really strong buy signal for us? Could we have 50-50 this market all the way down and been profitable, 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 profitable? Here we are coming up again. All the stuff that, all the stuff that we were holding on for, all of this while we were making more of it. All the stuff, let me say that again. All the stuff that we were holding on to when the value was coming down. We were making more of it because we were selling high and buying it back lower, and then selling it high and then buying it back lower, and buying it back lower, and then selling it high and buying it back lower, and buying it back lower, and buying it back lower, and then selling it high. Okay? All this time, the value has been draining out of here. We've been making more of this. We had some, now we have more, and now the value is going to go up again. This should be registering something really important with you. Your dollars don't do this for you. Your dollars don't work when their value is going down. Your dollars don't work when their value is going up. Your $5.50 always buys a gallon of milk, and there's really nothing that changes about that when it sits in your bank account. These predictive indicators can change the way that you see this market once you have used them enough to allow them to correctly predict for you. You can even see a very crude head and shoulders in here, another crude head and shoulders in here. I love these types of situations where the market just literally reads like a book to me. Litecoin and BTC. Oh yeah, man. Did we predict that we were going to stop? The market was going to pause right here? Absolutely. We drew this line way back here because we came down and we touched it, and it happened again here. And we predicted that when we came up here and we did 1, 2, well, didn't even get the third one in. These were really strong sell signals. Could have bought back in here, and we could still be holding for profit. We could still be holding, selling. We could have sold half our position here, and another one of our position here, and be holding on to the rest of it just for the moon, for all that it matters. If we had planned for that possibility down here, and known that if it came up here, we would need to double up on that position to bring us back to parity down here. The profitable trader will go back and build a strategy that incorporates his maximum profit opportunity into it. He won't just go for 2% unless he's really automating that. That's a fine automation strategy, but I don't think it's a very good human strategy. It works when you're starting, but what you really want to do is you really want to find your maximum opportunities and stretch those out further once you feel comfortable that the market really is telling you that you can do that. Right now, is the market telling us that we have higher to go? I really don't think so. I think we've made, our motion off of here. And at this point, we're probably looking for a correction. We'd really like to be taking some profits at this level. I think other whales are going to be saying the same thing. They're going to be wanting to come back down and buy back in here, okay? So do we have to go all out at this point? No. What we could do is we could plan to 50-50 in. We don't have to just go whole hog. We could always plan to never sell one position. We make our profits off of everything, and then so say we get to 8, we sell 7, we reset, and we just hold on to one position. We make our 1, 2, 4, and we sell 3, and we hold on to one position. Now we have 2 positions. Over time, we amass Litecoin. Over time, we build up our assets. Over time, we layer into the market. We bring ourselves into a profitable position and a 50-50 position across multiple opportunities over time that we really like, because these are, top 10 coins. This is Litecoin right here. EOS, BTC. Probably be the last one of the evening. Well, goodness, guys, I really just don't have to, I have to keep on bringing in more and more and more and more and more to tell me what it is I need to know. That never does make me feel good about it. I think we probably have stopped a lot of the bleeding at this point. But you know what I'm not seeing is any real volatility here. Yes, we're seeing a spike up. I understand that this is exciting. Oh my goodness, whoop-de-doo. Sorry, it doesn't excite me, because I don't see a real nice up and up and up with down, down, downs in them, and then down, down, downs with up and up and ups in them. That's what I'm really looking for. Could we absolutely bottom out here? Yeah, I suppose. Could we still run more down and really not give you the proper opportunities to exit and really make you a bag holder if you are not some sort of ridiculous 10x up trader on this? Yeah, I'm really afraid you could. And don't get me wrong, that isn't to say that you can't roll the dice and have it go like this on you. It absolutely could happen. This could be the moment when the trend reverses itself and it never reaches this price again, ever. You'll never get it this cheap again, ever. And if you buy $10,000 today, in 6 months, you'll be a millionaire just by sitting and holding this. It's possible. Do I really think that's going to happen? I don't know. I'll tell you what I do know. I do know that when you start with micro positioning, you can do anything. You want to take a risk on this? You want to roll the dice? Absolutely. Roll the dice. We've got all new lows coming in here. We have no idea where we are in the market. Want to roll the dice and then just let it sink forever and then come back and maybe give you a sign somewhere you can buy back in when it does? Let's see here. If it comes down and we do, one of these, it goes to 5,000 Satoshis. And then, we ruminate around here for a while. And then finally it starts to give you a glimmer of hope and it comes like this. I guess. Could happen. It's not really the market I want to be involved in. I want to be involved in a market that's going to give me quick entries and quick exits, and I want to turn those profits around over and over and over again. 2%, 3% are really nice. 20% and 30% are always better. And in these markets, we can go and we can hunt these down. These are not small markets. These are not penny stocks. Don't treat them like penny stocks. Don't trade penny stocks. These are very much big markets with big market players and big opportunities in them. I screwed that one up. Look at this one. Not quite a true head and shoulders. We had the right shoulder being shrugged above the head. Could we have seen some Fibonacci action in this? I'm betting we could. Let's start with an extension. We'll come down from this right here to here, down to here, and then we'll extend it out. We'll get rid of these distractions, these manual resistance and support levels. We'll see what we can see. I'm telling you, traders really like this in this market. This 1.6, this 1 plus the golden ratio. Traders really like this in this market a lot. And here it is again. Here's the golden ratio right here. Sure enough. And definitely the one above it was even more significant here. And down here, didn't really see a whole lot. We definitely did see a bounce off of the 23.6% line right here, but not anything really significant. Could we expect that to happen again? Sure, let's see that. We were to go from here, coming up to here, bring it on down, and then extend it on across. Okay. Right at the 100% mark. Yep. This extension was 1 plus the golden ratio. This extension was 1. Very highly correlated trend lines. Look at how it came in to meet the 78.6 right here and stop. Fibonacci extensions, they're really, really extremely useful. Here's a head and shoulders. Okay. Here's a descending wedge. Get candlestick patterns. My sensei used to love candlestick patterns. He used to love the 3-strike patterns, which is 3 lower downs and 3 candles lower, and then 1 big candle up to match them. And he used to think that, that was a really strong signal in the markets that he was working in, which are incredibly different than this one. And he would build all kinds of signals off of this, which brings me to my closing remarks. We've now been together for over a week, some of us. The week has really begun with Monday for some of you, and even before that for a few of you. This journey has been fantastic, and I cannot wait to continue it next week. This weekend is a holiday weekend here in the United States. I'm going to be taking a 3-day weekend. I'm going to be taking a little bit of time away from the computer, spending it with my family. That's Saturday, Sunday, and Monday. I invite you to do the same. If you are just getting up to speed, please watch the webinars, please draw trend lines, and please do it while balancing that, with spending time with your support network, whatever that is that it looks like. If it's your friends, if it's your family, make sure that the computer is not the only thing that you are constantly staring at. Because so far, we have gone from zero to people understanding the mindset of a professional trader in 5 days of lesson planning. And people have been planning to reach this point for 5 days now. And for some of those, for those who have displayed discipline, it has really paid off for you. Next week, we're going to be shifting into third gear, basically bypassing second. We're going from first to third. We're getting into the really heavy stuff. We're talking about intermediate trading techniques. We're talking about stuff that I wasn't doing in my first year of trading. I'm talking about writing signals. I'm talking about bringing in additional markets and how to bring in secret signals and other signals that we wouldn't necessarily think are correlated, but are very much something that that the pro traders know how to use. We're going to be talking a lot about the ways in which these markets can change, and we're going to be talking about different options with regards to different vehicles to trade these markets with. There are different derivative contracts and different ways of exercising your money within these markets that can absolutely maximize your potential. And if you're not careful with what you're doing, they can really hurt you too. So finally, we're going to be talking about automation a lot and tying all of these intermediate things together, leading into our third week, which is going to be the advanced class. And by the fourth week, I expect all of us are going to be spending the week together just going over everything that we learned in the first 3 weeks. And this is a really critical time because at that time, we're going to be opening the doors again to a whole new set of students. And I hope that some subset of you move on to the master class, which is for actual whales. And that doesn't mean that you have to have $1 million in your portfolio, but it does mean that you better be prepared to think like one. And the prerequisite is having gone through this path first and making it to the end. There is no other way to make it into that level of prestige, which is what I'm ultimately aiming for with all of you. So I really do hope that you all commit to your discipline. You commit to planning. You commit to practicing planning and planning the trade and trading the plan. Because when you do, it will make you profitable. Thank you all so much for your time. I really appreciate it. And I look forward to seeing you refreshed and ready to go on Tuesday, where we will be jumping right into the intermediate lesson plan. Thank you guys, and good night.